Okay, let's go ahead and get started. Good morning and welcome to today's Tuesday Market Outlook session. My name is Prakash Vijayanath. I'm a senior analyst here at Options Play. And today I'm going to be walking you through my thoughts and analysis on the current market. So quite a bit to get through today. And before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. So our agenda for today, as usual, kicking off with the major equity indices, highlighting some key levels. And we are seeing a lot of choppy price action here at key resistance areas, especially for the S&P 500. So we will be taking a closer look at that. From there, we'll be moving on to fixed income and commodities. We'll take a look at the sector rotational model, highlighting which sectors are outperforming and underperforming the overall market. We'll take a look at some subsectors of interest that I have for you today. And as usual, ending today's session with some bullish and bearish market observations. So starting off here with the S&P 500. And, last week was a huge week for equities, and that didn't really pan out in the price action that you can see on the chart. So last week, we had two huge macro catalysts. We had, obviously, the Fed meeting and the Fed speech indicating any forward guidance as to what the Fed may do next regarding interest rates. And we also had non-farm payrolls on Friday. Now, my expectation heading into last week was that one of those two events could essentially act as a upside catalyst to see price finally break above this key area of resistance at near the 23.6 fib level, around, let's say, 410 to 420 area of resistance. But that didn't really turn out to be the case. I mean, yes, there was some volatility for sure, but we didn't really get to see that upside breakout. Instead, we actually got, if anything, a bit of a downside surprise. Price revisiting that 404 area and already finding some support yesterday. On Friday, finding some momentum to move higher, and yesterday, price staying pretty much equal to where it opened. Now, I do expect, yesterday to have very little price action, as well as today, due to the fact that we have another important piece of data coming out tomorrow, and that is a CPI inflation print. Now, that is going to be, again, watched by markets because it's going to give us some clues as to what the Fed may do next. Now, the Fed did increase rates by 25 basis points. That was already priced in. However, they continue to say the same thing about being more data-driven. And, if that's the case, if it only emphasizes the fact that this inflation data announcement coming out tomorrow is going to be of great importance. So regarding the price action itself, we have a lot of choppy price action at this key area of resistance, making it very difficult to actually trade and gauge where the S&P will head next. Inflation data, if it comes out well below expectations, we could very well see an upside break. The reason for that would be that markets will definitely view that with a more dovish view from the Fed, indicating that the Fed, if they see low inflation, the Fed may not pursue as aggressive of a rate hike policy or keep those elevated interest rates for a shorter period of time. However, if inflation does come out higher than expected, you are going to most likely see some bearish price action due to the fact that it would give the green light to the Fed to keep interest rates elevated for longer. I don't expect interest rates to move drastically higher, maybe at the most another 25 points before we start to see a pause at around June, July. And potentially even, interest rates starting to cut down by November or so. But again, it comes down to inflation and how the Fed views inflation. So all eyes on tomorrow. And I completely understand, if you're finding it very difficult to trade yesterday or Friday, it's due to the fact that over the last few days, over the last week, it's been, quite a busy period in terms of the macro picture. And I think markets are still digesting a lot of that news and to get a better understanding of where price will head to next. So for now, still remaining quite neutral. I would say, stay out of markets just a little bit, sit in your hands, wait and see what the inflation number comes out to be, and see how price reacts to that figure. We may still get a breakout, or we may actually get a breakdown below the 410 level and a revisit of 404 and potentially even lower. You have minor support at the 390 area, and you have major support at 380, which is the 38.2 fib level. So those are the two key areas of support in the worst case scenario that I see equities heading down to. But again, recent price action does indicate that this is a higher high, a higher low compared to the revisit of 380, the recent revisit of 380. So technicals, in my opinion, still point a little bit more to the upside, but again, very much dependent on the macro picture. Now, moving on to the NASDAQ 100. NASDAQ 100 definitely outperforming the S&P 500 by just a little bit. So yes, price is opening a little bit lower this morning, like it is going to be for the S&P 500, but still breaking out on a relative basis, right? Breaking above the 320 area, which is acting as resistance. Not a confirmed breakout just yet, especially with price opening a little bit lower, but you can clearly see there's definitely a bit more momentum with the NASDAQ 100. Price last week did pull back to the 315 level and already shot up higher. So it's indicating that there is still some good momentum there. Again, NASDAQ 100 is a lot more sensitive to interest rates due to the fact that they are more exposed to growth names and technology names, and also less exposed to the financial sector, which is still struggling with the banking turmoil from a couple months ago. So for those reasons, the NASDAQ 100 will naturally outperform. But again, if the Fed is going to be more hawkish, or if inflation comes out higher than expected, I expect the NASDAQ 100, at least in the short term, to underperform the S&P, again, due to the fact that it is a lot more sensitive to interest rate hikes. In terms of key levels, on the weekly time frame, we can see here 330 key previous area of resistance. Price did react to that level as resistance. I would view it as a minor area, though. From there, you have potentially the next key area would be at around 360, even 370. So there is plenty of upside from a technical perspective if we do see a break above 330, but 330 is the next key level of resistance to contend with. Overall, though, price still maintaining that bullish structure defined by higher highs and higher lows. So, yeah, NASDAQ 100 definitely in a much better picture from a technical perspective compared to the S&P 500. Okay, taking a look at small caps, looking at the Russell 2000 ETF, the IWM ticker. Now we can see once again, price is respecting those key fib levels that we've had now for more than a year now, I'd say. You can see price respecting that 50% fib level at 170, even despite the recent, collapse with small caps, if you could say that. The banking turmoil saw price break below 188, the 38.2 fib level, and immediately decline to the 50% fib level at 170, where it is managing to stay above it. Even quite recently, last week, it retested that level twice. And we are seeing some intraday bounces from that level. Price is moving higher, but set to open lower this morning. Now, when you compare it to the S&P and the NASDAQ, small caps are definitely underperforming. They are not, you can see they're not even breaking out on a relative basis compared to the NASDAQ 100, right? It's struggling to even reach that 180 area currently. But the one thing I will say is it is respecting 170 support. So yes, we are seeing underperformance relative to large caps, and opportunities probably lie within large caps as opposed to the Russell 2000 right now, especially to the upside. But it is still staying above that 50% key level here on the key fib level. Right, moving on to TLT, the Treasury Bond ETF. So definitely losing some momentum. Actually, momentum turning negative yesterday on the 50-period CCI. Now, 108 key area. I've reiterated that for months, clearly acting as resistance. But more recently, though, price hasn't even managed to reach that level. There is a lack of momentum. Momentum is definitely trending downwards, and price, if anything, is pressurizing this 103, 104 minor area of support. Set to open a little bit higher this morning, but overall, a lack of upside momentum makes me think that I'm not sure that price will even reach that 108 area. Risk to reward does definitely favor the upside, but I would say it's a very limited move. It'll be a minor move to the upside. We need to see some more momentum here, or longer term momentum with TLT. On the weekly time frame, though, momentum has been improving, but not drastically. The key level of 108 still remains to act as a very strong resistance level. So if we do get a move up higher, close to 108, that will give another risk to reward, another good risk to reward bearish entry point for a revisit to the downside of 104 or so. Right, moving on to the US dollar. Now, the US dollar is actually managing to find support despite, being very bearish over the last couple of months. That area of support lies at this 101 level. Now, it has acted as support in the past where we saw a strong rebound back to 105.50. Price looking like it was going to break above that, and then we saw the banking turmoil hit, meaning that the Fed had to be a bit more dovish, had to be a bit more accommodating, and naturally, that is going to be bearish for the dollar. Now, since then, price has been on a strong downtrend and is still, technically speaking, on a downtrend. However, over the last few weeks, we are seeing multiple tests of this 101 level and a lot of intraday bounces from that 101 level. So for the first time in, I would say, a couple of months, we finally are seeing a more obvious area of support really confirmed over the last few days. Now, price action this morning, quite bullish. And again, I would expect the dollar to have a minor rally at least from here, potentially to the 103 area, but tough to say because dollar does seem quite bearish, especially with the Fed looking to pause interest rate hikes. That's always going to be bearish for the dollar, but a lot of that has already been priced in. Inflation data coming out tomorrow would be key for the US dollar. If it comes out hotter than expected, expect US dollar to rally. This will be because the Fed would have to be a bit more hawkish and markets would have to price it in early. And again, if it comes out lower than expected, I would say that could even see a breakdown below 101 for the US dollar. Moving on to gold, and we have very interesting price action here. So for those of you that have followed me for the last few months, I have said 192 is my key upside target. I said that I would say as early as December last year. And price has been on a very strong uptrend since then. Since November, there was a strong rally followed by a bit of a pullback, and then another strong rally on the back of the banking turmoil, due to the fact that gold is a safe haven as well, and US dollar weakness as well, contributing to this very strong rally here for gold. Since then, momentum has definitely declined, but still remaining quite positive. And if you take a look at what happened last week with those high impact news events, we saw price actually rally, spike up higher all the way towards that 192 level. Now, normally I would consider this to be a rejection, and it is technically speaking, it is a rejection of 192, no doubt about that. The only thing is, normally after rejection, you see a reversal in price and price starts to head lower and you see that bearish price action. We are not seeing that currently. Yes, multiple rejections of the 192 level, but price still making a higher low, still finding some support between 182.50 or 185. And even over the last few days, managing to move higher, set to open higher this morning as well. So that could be due to the fact that we haven't quite touched that 193 area just yet. Price was a little bit shy. That is a major resistance level. And if we do reach that level, that will form a huge triple top. So we haven't quite got there yet, and that's why we are maybe seeing not so much selling pressure here for gold and potentially a revisit of 192 and potentially 193 to complete the triple top pattern. So overall thesis for gold, I would say there's definitely room to the upside. The price action on the daily time frame and on the lower time frames does indicate that there could be more room to the upside. However, when you're actually trading it, price has rallied so much in the last few months that it becomes difficult to actually justify a good risk to reward bullish entry point, especially with the upside targets now being quite close to where price currently is trading. Okay, moving on to oil, looking at the light crude oil futures, we are seeing, again, last week saw a huge volatility in the oil markets. We saw price strong decline, breaking below that $70 level and actually touching 63, immediate bounce from that. So a bit of a double top here at 63, 64. Very bullish price action over the last few days, and this morning a bit more muted. And that simply has to do with the fact that I think markets are looking to wait for the inflation print tomorrow. So we could see, a breakout or breakdown depending on what happens with inflation. again, a more hawkish response from the Fed, or more, if inflation comes out higher and the Fed is therefore going to be more hawkish, we could see price actually decline, because again, that it elevates recession fears, and therefore, that's a headwind for oil. So we could see a decline there for oil. But if inflation comes out better than expected, we could see a breakout from this from that 73 area, and potentially a revisit back to that 81. So once again, playing with this range. And oil has been pretty much respecting this range. Obviously, recent volatility has meant that it has seen a strong breakdown, two strong breakdowns, but again, still limited to that 63 area. So still, supply and demand dynamics of oil are still very much balanced, in my opinion. Moving on to the sector rotation chart, we have 6 sectors in the improving and leading category, and we have 5 in the lagging and weakening category. So not too much of a shift. The only one that has moved from the lagging to the improving category was healthcare, which we saw coming for the last couple of weeks, right? There was an increase in momentum, and we have now seen healthcare rotate into the improving category, along with its defensive peers, defensive sectors, and utilities and staples. So these defensive sectors are definitely seeing inward rotation, and that also has to do with the fact that investors, after the recent rally in equities, are rotating into these defensive sectors due to the fact that there's a lot of macro data coming out in the last couple of weeks. So staples looking like it may rotate into the leading category, but we need a few more days of price action to really determine that. Communications and technology losing out on some momentum. And in terms of the lagging category, we have financials, a strong, obvious underperformer with everything that's happened over the last few weeks. We have real estate as well, and we have energy improving some for a momentum perspective, still losing out on relative strength against the overall market. And with oil markets essentially range bound, I think that gives very limited opportunities for energy names. So energy, tough one to trade. If you are going to trade it, you want to trade the range, like that we saw in oil, and it'll be very short-term positions, so it won't be long-term positions if you are looking to trade energy. All right, so moving on to some subsectors of interest that I have for you today, we have TAN, the solar ETF. This was a bullish idea from last week, and it's actually moved a little bit lower in the last few days, but bullish thesis definitely remains intact. Last week, I mentioned this is one to add to the watch list, and because I was looking, when prices at 72, I was looking for a retest of the 67, 68 area, and we actually got that, and we are seeing bullish price action. So immediately, as soon as price hit that 67, 68 level, we have seen a bounce high from that. So this would be a good bullish entry point, in my opinion. Major area of support, price a little bit oversold, or was oversold a few days ago, and a nice risk reward bullish entry point for a retest of the top part of the range, anywhere between 75 and 80. So nice entry point for TAN, and despite the bearish price action, our bullish thesis definitely remains intact for this one. Moving on to DRIV, the other idea that I had for you last week, which is the autonomous and electric vehicle ETF. Now, this has definitely been an idea that has played a lot better into our hands, because last week I was looking at the bounce from the 22 level. And even though initially we saw some bearish price action and a retest of 22, since then we have seen some very bullish price action. So definitely in a nice profitable position and looking good for that continuation higher. The only downside risk from a technical perspective that I can see is this trend line. We need to see price break above this trend line and for further confirmation of a continued uptrend. If we see bearish price action on this trend line, it might indicate to get out of the trade early and take those limited profits and run. But for now, upside target remains 25. Moving on to a new idea for this week, it's Intel. So again, revisiting Intel. Intel was a bearish play that I had a few weeks ago, and especially when we saw this huge rejection from the 31 area. And it was a play that did well initially, and then we saw that become invalidated. So it was quite unlucky for us. However, price rejecting 33, moving lower, back below the 31 key area of resistance. And it did try and move higher, but couldn't really close above 31. And we are seeing a lot of resistance at this 31 level once again. So 31 resistance back in contention, price set to open a little bit lower this morning. And I'd be looking for a short-term bearish move back down to 29, or perhaps even a new lower low at 27. Minor area of support. And you'd have major support at 25 for Intel. So good risk to reward bearish entry points. And we are also seeing, a lack of momentum very suddenly. Okay, taking a look at Fidelity. So Fidelity was another new bearish trade from last week. And this is a trade that is pretty much neutral for us. So last week, price was at around 57.50 when I hosted this webinar. And overall, yes, price is at a strong bearish trend on the weekly time frame, but on the daily time frame, we have seen a revisit of 56. Still, though, the bearish thesis remains intact, bearish structure remains intact, using previous areas of support as resistance, like we've seen throughout this whole downtrend. And the risk reward here still favors the downside for Fidelity. So this bearish trade is still very much in play. First target would be 50, and the second target could be a new lower low. Okay, taking a look at Apple, our long-term bullish idea. So this has been pretty much for a couple of months now, a bullish trade for us. Ever since price broke above that 156 level, we had an intraday retest and a strong move higher. And finally, I can say that we are at a take profit condition. I've said that take profit zone was between 175 and 180. Price is at 172, 173 now, so a couple dollars short from take profit. However, we do have inflation data coming out tomorrow. It's a high volatility event, and we were so close to take profit that it actually makes sense to take profits a little bit early and move on to the next one, or have less exposure in the markets until after tomorrow. But Apple, a very nice trade that has worked very much in our favor, and finally at this take profit zone. Right, IBM. So IBM, bearish idea from last week. From the last 2 weeks ago, actually. And IBM has been on a strong bearish trend. This was an idea that we had a few months ago, ever since price broke below that 137, 138 area and confirmed previous support as resistance. It was a trade that worked very well for us. And then since then, we've seen this rally back to that area between the 21 and 55-day exponential moving average. Also, previous support turning resistance. So that provided a good risk to reward bearish entry point for a move lower, and price actually managing to bounce once again at 121 end of last week. So bearish price action is still very much there. Bearish thesis remains intact, and I do think that it makes sense to maybe close out half the position now and see if we see a breakdown of this 121 level, 122, 121. We are seeing price open at that area of support, and that could see, a potential breakdown at a new lower low form, potentially at around 115 or so, 115, 116. That would be the major weekly area of support. Okay, taking a look at another idea from last week, and that is CBRE. That is part of the real estate sector. So we know real estate is performing quite poorly, and that's why I was looking at a bearish pick last week for the real estate sector. So CBRE, when we covered this last week, was trading at 76, and since then it has moved lower with some very strong bearish momentum back down to 73, 74. So very much working in our favor. However, the one thing I will say is that we are seeing multiple intraday bounces from 72. That could indicate that price could potentially have a minor bounce higher. So for this case, I'd be looking at potentially closing out half of this trade for a nice profit, seeing what happens with price if it breaks down or manages to actually bounce higher. If it does break down, happy days, we can keep that trade open and look for a revisit of 68. But if it moves up a little bit higher, if you see bullish price action after these consecutive bounces of 72, it would indicate closing the second half of the trade closer towards a break-even price, but still, makes sense to get out of half of the position now after seeing these multiple intraday bounces. And with that, that is all I have for you today. thank you so much for joining me, and I hope you all have a great trading week. I will see you next week for another Markets Outlook. Have a great